Good morning, good afternoon, good evening, wherever you are. My name is Paul Mills. I'm a financial advisor and wealth partner with True Potential Wealth Management. I'm here today to talk to you about your workplace pension scheme that is just about to start. I'm sorry I can't be with you there directly, but hopefully this short presentation will go a long way to answer any queries you may have. If there are any further queries, you can contact me by telephone or email, details at the end of the presentation. So, who are True Potential Wealth Management? Well, we're one of the largest financial advice firms in the UK. We've got a head office up at Newcastle that supports about 500 wealth partners, and we're all in turn giving advice to individual clients, employers, and I work very closely with accountants and solicitors to provide a bespoke service for private clients like yourself. Over the last 4 or 5 years, we've been concentrating on the auto-enrolment market, which is a government-led incentive that is ensuring that all employers in the UK are offering a pension scheme to its employees. This is not by choice, they've got to do this, and from your staging date, which is the date that your pension will start, your employers will be responsible for setting a scheme up, paying into that scheme on your behalf, taking a small amount from your pay as well towards that scheme, and then making sure that the government tax relief is also applied to that scheme for you. The whole idea here is to make sure that there's a pot of money for your retirement to help and assist, in addition to your state pension benefits that may be available when you retire. I'm going to take you through some slides now on how the actual auto-enrolment scheme works. Not everyone is eligible to join the pension scheme. Not everyone wants to join the pension scheme, so this is important. If you are over 22 and below normal retirement age, and you earn more than £10,000 a year, you will automatically join the pension scheme. You'll get a letter through and an email confirming you've joined the scheme and giving you some options around that. I'll go into a bit more detail on that in a moment. If you earn less than £10,000 a year, or indeed you're less than 22 years of age, then you still may be able to join the pension scheme. You will get a letter and an email just detailing what options you do have. But the important thing is here, if you do join that scheme, your employer has to pay in for you, you pay a contribution, and you get the tax relief as well. So you will be saving for your retirement. So we always advise, as advisors always say, it's never too soon to start. So initially, you as an employee will only have to pay 0.8% of your salary. Now that's not a lot, less than 1%. So 0.8% of your salary into the pension to start on a monthly basis. 0.2%, so that's topping your 0.8 up to 1%, so 0.2% is paid by the government, and then your employer has to match that, so they also have to pay 1% in. So it's 0.8% from you, 0.2% from the government, and 1% from your employer. So a whole 2% of your pay will go into a pension pot with your name on it that will be available for you when you retire. That payment won't stay at that level. That payment will actually increase each year, and by 2018 you will be paying 4%, the government pay 1%, and your employer will be paying 3% in. So basically 8% of your income per year will be going into your pension. That pot is your pension retirement savings with your name on that. So if you do leave this employer and go work somewhere else, you'll be able to take that pot with you and join the scheme with the new employer. So this is all about creating an income for your retirement. The rules keep changing, and the government keep changing the rules in terms of how you can access your pension, but a few years ago they made it very flexible so that you can actually draw all of your pension pot from age 55 with relevant tax additions added. But basically most people will draw 25% of that pot in cash, tax-free, and then the rest of that money is then drawn to provide a pension in addition to your state pension. So this is not instead of, this is in addition to. And the whole idea is to make sure that you've got sufficient money in retirement to live on, because the state pension as it stands at this moment in time is quite poor. We're looking at about £144 per week. So you have to ask yourself, if you were to retire today on £144 a week, how would you cope? Is there a big drop in income there? Now if you think you can, no problem. but generally the vast majority of the population can't survive £144 a week, so the whole idea about boosting this savings. The good news is that your employer's already set this scheme up, so it's all ready to go. And as you join that scheme, you will automatically become a client of mine and a client of True Potentials. So we can track together, and I'll show you how to do that later, you can track exactly how much is in your pension pot going forward. It enables you to plan for retirement and know exactly what you're going to be drawing and make sure there's going to be enough money to live on. So first of all, you'll receive an email from True Potential Head Office just welcoming you to the pension scheme. That email will detail whether you've joined the scheme or not, and also direct you to the True Potential investor site, where you will have to register with us so we can monitor your pension progress. So basically you'll click on the registration button, the blue button there, and that will take you through to a confirmation screen that tells you whether you're enrolled or not automatically. If you don't want to be in the pension scheme, you can actually opt out. Now this is something that we can't give you advice on, and neither can your employer. The government's very keen for you to be in your pension scheme, but they do recognise that it's not for everyone, and they'll give you the option to opt out. They'll give you that option every 3 years. So basically, if you do decide to cease contributions, you come out of the scheme, you won't build up contributions for the future and you will not generate a pension pot. But in 3 years' time, you will automatically be put back into that scheme again. So there's a very clear message here. The government wants us all to be saving for our retirement. If you do want to opt out, you go to the bottom of the screen there, Cease Contributions Declaration, click on that, and then there's a declaration there, read that, and then you basically tick on that box at the bottom there to confirm that you're not going to be a member of the scheme. If you do want to continue, and hopefully everyone will, then we'll go on to a verifying details screen. You just need to go through this screen and ensure that all the details are entered correctly there, and then keep clicking on go. Then it'll ask you to fill in an expression of wishes form. Now this is important because if anything should happen to you and you die early, then your pension pot is yours. So it will pass then to your beneficiaries. So this is an opportunity to put in the people you want to benefit from your pension if you were to die early. Right, moving on, once you've done that, we require you to set a goal. Now, you don't have to if you don't want to, but we often find it's a good idea to set a retirement goal so you know what you're saving for. And you can go through this screen, the following screens, and you put in on how much you would like to draw. Now, bearing in mind that you'll still get your state pension, but if you work out what you think you might want to live on in retirement, so that's probably similar to what you're drawing today, but less anything like maybe mortgage payments or loan payments or whatever. And then state a date on there that you want to retire by. I would probably set at the normal retirement age for now. And then it will work out what you ought to be saving towards your retirement. You can see on the next screen here that for this example, someone's on £40,000 a year. Their initial contribution is 1%. The employer's paying 1% in, so there's 2% going into the scheme already. And there's a little graph at the bottom that basically charts the progress of your pension and how close to your goal it will meet. And if you decide you want to pay more into the scheme, you can change it at this point. The next screen will ask you to set a level of risk. It's defaulted to a balanced attitude to risk, but let me explain what attitude to risk means. We all recognise that if we leave money in the bank or building society, that certainly in current times, we're not going to get much in terms of interest. Likewise, if you were to invest in Joe Blogg's widgets down the road, which is a startup company, if they do really well, you may make a lot of money, but the risks are very high that they may fold. So basically, we recognise that banks and building society savings are a very, very defensive or no risk environment, and shares are a very high risk environment. There's a trade-off between risk and reward, and we expect a balanced investor over their working life to get a good reward or a good return from their money. You can change the attitude to risk if you want to away from balanced, and you'll see the difference it can make. The next screen is about fund choice. Now, basically your employer has chosen a default fund, which is the Legal and General Automatic Enrolment Fund, and it's a balanced pot. You can, at this moment, change funds and go into something different if you want to. So we've got some recognised, very well respected fund managers there who can also grow your pot for you within the True Potential pension. Next screen then shows us basically what your pension is growing at and how much your pot is worth. There's a lot of information on this screen, and you'll notice down there as well there's a little live chat button on the bottom right hand corner, so if you do get stuck and you're confused about any of this, you can just click on there and it'll explain how to find the information. Along the top you'll see performance, asset allocation, account information and documents. If you were to click on the document form there, document tab, then that will take you through to all the documentation that is posted out to you regarding your pension. So if you ever do lose it at home, you know exactly where to find it. There's copies of it there. You'll notice on the left hand side there's a button called Impulse Save. Now if you were to click on that, that will take you through to an automated system that allows you to top your pension up at any time. You can do this on a computer, you can even do this on a smartphone. In fact, this is exactly how I top my ISA and my pension up. You can choose an amount to get you back on track to make sure that your retirement is being funded in the correct way. So this is if you want to make additional contributions over and above what your employer deducts from you on a monthly basis. Some other questions I get asked regularly at presentations and seminars is what happens to the money if I die? The pension pot doesn't die with you, it does go to your next of kin. So if you've not made a will, or even if you have made a will, it's a good idea to fill in an expression of wishes form. That you can do initially when you first log into our system, or if you do need that at a later date, let me know and I can email one over to you. And all that does is tell the pensions company where you want your money to go should anything happen to you. If you move from this firm and go to work somewhere else, they will, by the definition of this being a legal requirement, have to provide you with a pension themselves. Your pension pot with this firm and True Potential can be transferred over to your new pension at the new firm. So this money really is your money for your retirement and your future, and it goes with you wherever you work. People often say, can I have a break from the pension for a while? You can. So you can stop payments. You just have to notify your payroll department that you want to stop payments into there. You can have up to 3 years off, but if you remember from an earlier conversation, you do need to make sure that you're contributing to a pension, and every 3 years you'll be automatically put back into that scheme. But yes, you can have a break from contributions if needs be. If you want to pay more into your pension over and above what the employer is contracted to do, then you can do. You can arrange for that monthly contribution to be increased. Again, just speak to your employer or speak to payroll and they'll arrange to pay more in. If you want any advice around how much you should be paying in, please don't hesitate to call me. I can speak to you over the phone or I can send some information via email. The whole idea about this pension is to try and save as much money as we can possibly save for your retirement. It's your pot with your name on it, and it's down to you to take control really of that pot. So in summary, look out for the email coming through near your staging date. That gives you the options and automatically enrolls you into the scheme. Log into our system, record your details, fill in an expression of wishes form, and then there you go. Away you go, you've got your pension pot and it's started. So there we are, quite simple, a pension scheme being set up by your employer for your benefit. If you've got any queries at all, please don't hesitate to contact me. Here's my details, email address and telephone number. Thank you very much for your time, and I look forward to speaking to you in the future.